Good morning, everybody. Welcome to this webinar brought to you by the Hudson Valley chapters of SCORE and presented by one of the SCORE partners, NAV, with two guest speakers, Ty Kissel, who is the Director of Content and has spent a career in the whole space of business financing, and Jerry Detweiler, the Education Director at NAV.com. And Jerry has also just a vast experience in the financial services area, and I think we're in for a very spectacular presentation today. Could you do the next slide, Ty? Just to give you a little introduction, SCORE is a nationally based, all-volunteer, not-for-profit. Our goal is to foster a very vital and vibrant business community, and we do it through offering a couple of services. Primarily, we offer business mentoring, confidential business mentoring, where we meet with clients one-on-one or mentors to client to try and work through issues and concerns. We also offer webinars like you're seeing now and workshops. And finally, we have a vast library of online educational resources that you can access through our website, which is www.score.org. We work with pre-startup clients, through startup clients, new businesses, and businesses that have been in existence for many years. Our volunteers cover a tremendous number of industries and areas of expertise. And we bring the right resources to bear to your challenge. To reach us at the Hudson Valley SCORE, Ty, would you do the next slide? We have just our information. Whoops.
Oh, for God's sake.
Oh, it ran away.
Well, you made the mistake of letting me drive this thing.
There we go.
Oh, great.
Hold on. It's kind of going nuts
There
here.
we go. By the way, we went through that very fast. I hope you all took down all those numbers and have them squared away. We'll also show this slide at the end of the presentation. And just in case you're concerned, we will be sending a copy of this webinar to everybody who has registered. And of course, this information will be included in it, so you can get it from there as well. Ty?
I don't know why it's doing this.
Yeah, and we have
There we go.
how the webinar will work. Just very briefly, like many webinars, everybody will be muted during the presentation. If you have any questions that you'd like to have answered, which we'll wait till the end of the presentation to address, please submit them to us, not through the chat button, which is turned off, but through the Q&A facility of Zoom. And we'll answer as many questions as we can after the presentation. And those that we don't get to, we'll try and answer when we send the information back to you, the slides and the presentation. You can also reach out to us at the telephone numbers that will show up again for the SCORE chapters. And we'll also be sending you the contact information for Ty and Jerry. And with that, let me turn the control button and the microphones over to our two guest speakers from NAV, a SCORE partner, Ty Kissel and Jerry Detweiler.
Well, hopefully, I know a little bit more about small business finance than I do driving a slide presentation. But we're really glad to be here. My name is Ty Kissel, and my colleague Jerry Detweiler and I, we spend a lot of time speaking to groups like yours about small business financing. And, I'm convinced that there are more options available today than ever before, but you need to know where to look and how to find them to finance your business. And we're going to talk about what some of those options are and where to look. So good grief, Jerry, I'm having a hard time here.
Sorry. I guess
Whenever I scroll, it jumps several slides at once and then pops back.
that's interesting. Maybe just try your on your computer the arrow instead. Maybe
Yeah, all it does is click.
It does, huh? That's
It
interesting.
just makes the sound.
Okay, well, if it keeps happening, I'll take over and I'll load the, I'll share the presentation.
Okay.
So why don't
Good.
we, and actually we're going to do a poll. So why don't we go ahead and do the poll? And while we're doing that, I will take over and I'll share my screen instead.
Yes, that's a good
So we'll have it
idea.
on my
Good
computer.
grief.
And in the meantime, the poll, we want to ask and understand a little bit about the challenges that you might be facing getting financing. These may not be your exact challenges. You may have a different one. But if you want to go ahead and pick out of these what you think of these options, what would be your top challenge in getting financing? We just like to learn a little bit about what kind of things you're experiencing. So Ty, I'm going to have you stop sharing so that I can share.
Okay,
you don't
sorry,
mind.
everybody.
And
But,
then I will share my screen. We'll go into
Yeah,
presentation.
financing is available. However, it is definitely a challenge in some instances. And a lot of that depends upon where you are in your business. And, for example, early stage businesses and startups are particularly challenging for a lot of small business owners. And it looks like Jerry's having the same issue I was having.
Yeah, unfortunately, it's not letting me scroll. So I'm going to stop sharing for a moment because I have another version of the presentation on my computer. And I'm going to try that version and see if that one will let us share. Okay.
Sounds good.
So give
You
me
know
a
what they
second,
say,
guys.
the best laid plans of mice and men always go
That's
awry.
right.
And it always seems to happen to me in the middle of a webinar or presentation of some kind. It's kind of a love-hate thing with technology. It does really good when it does good, but when it's bad, sometimes it just falls right to pieces.
Yeah. So now are you seeing my screen okay?
No, I don't see your
Um,
screen.
Okay. All right. This is fun.
Jerry and Ty, let me know when to share the poll results as well.
Why don't you go ahead and share the poll results and then I'll try sharing my screen. I don't know if it's holding it up from sharing. Okay, so the number one response that we got here looks like you're a startup. Okay, great. We will talk about some startup financing options.
Yep.
Another is no or low business revenues. We'll talk about the different factors and what you can do to address some of those. We do have some options for businesses that don't have a lot of revenues. Credit, we've got options for that, and then not sure where to look. So for all of those options, we should be able to help you find some financing options that may work for you. So are we seeing the screen now?
Yes.
Okay, wonderful.
Yes.
All right, so it seems to like this version of the presentation better. So let's get going. All right, so Ty and I want to talk to you today about the criteria that lenders look for. We want you to really understand this because it's different in business financing than it is in consumer financing. And then we want to talk about getting your small business loan through a bank or traditional lender, which is what a lot of small businesses like. And then we'll talk about other lending options. So if you don't fit into that box that the bank or the credit union is looking for, what other options are out there? And then we'll talk about some free resources we have to help you be successful. So Ty, do you want to first give the overview of what lenders are looking for in small business financing?
Yes, not all lenders are going to ask the same questions, and many of them will ask the questions differently than what I'm about to ask you. But generally speaking, lenders have a couple of important questions that they want to ask before they will approve your loan application. And the first question is, can you repay a loan? Can you make periodic payments? Do you have the revenue and cash flow that demonstrates that you can make regular payments? And depending upon the type of financing that you get, it may be a monthly payment, it could be a weekly payment, and in some instances, it could even be a daily payment. And so they're going to look at your revenue and your cash flow to determine whether or not you are able to make payments. The other question that they're going to ask is probably just as big, if not bigger. They're going to ask, will you make all your payments? That's a little bit different than can you? And basically to determine that, they're going to look at your time in business. They're going to look at your track record. That's one of the reasons why it's difficult for startups, because they don't have a track record. So they don't have a way for a lender to look at them and say, oh, well, you've made payments in the past. We're going to talk about some ways around that and how to improve your odds there. And they're also going to look at your credit profile. And I say profile intentionally because your personal credit score is part of that, but also your business credit is part of that. And together they create a credit profile that lenders are going to look at to determine whether or not you will. They're basically looking at a crystal ball, which is your credit profile and your track record, and trying to determine what you will do in the future based upon what you've done in the past. And for most small business owners, and likely everybody in this room, your personal credit is always going to be a factor. So you can't ignore your personal credit to build your business credit. They're going to be looking at both of them.
Yes, and so I look at these as the three pillars, and if one is not strong, the other one should be. But there are some of you who may not qualify in any of these respects. You don't have revenues yet, you don't have time in business, and you don't have great credit. And we do have an option to talk about later. So there is something out there that may be of help to you, but I do want you to understand that those are sort of the three legs of the stool that lenders are looking at. They want to see as much strength in those three legs as possible. The other thing they may look at is your industry. So this is typically because lenders will have certain industries that they call restricted, where they don't lend into. A lot of the what they sort of call the sin industries, maybe adult entertainment or gambling or things like that, where they just don't lend into. And then they may maybe they've made their quota of, loans, real estate related loans for the year. And so they're just not lending anymore. So sometimes it's just related to this. Now, the way they determine that often is with something called your industry code, which is either your SIC or SIC code or your NAICS code, NAICS code. These are codes that were developed by the government for statistical tracking purposes. The SIC is the older version, the NAICS is the newer version. So your business will probably end up with both, and they often show up on your business credit reports. So if you do have a business credit report and you check it, and we'll talk about that in a moment, you want to look and make sure this is accurate. And I'll just tell you a real quick story. We had a NAV customer who he manufactured signs that realtors would put in their front in the yards of the properties they're trying to sell. And he was having trouble getting financing. And he discovered by checking his business credit that his code, his NAICS code on his business was appearing as if he was a real estate agent. And in fact, he's a sign manufacturer. So he got that fixed. And then he started getting more offers because it was just a different type of lender looking to lend to a manufacturing business than a real estate business. So just make sure when you get your business credit that you double check that. And if you're filling out any kind of paperwork to incorporate your business or an application, you want to make sure that you spend a little time just to make sure you find the code that's most applicable to your business. You may not find the one that's exactly what you do, so just get as close as you can. Ty, you want to go into the first steps?
Yeah, I was just going to say, there are some things that you should do, like the slide says, first things first. You need to, and these are going to sound kind of nitpicky, but they really make a difference when you're making your loan application, particularly your first loan application. If you're a younger business, open and use a business bank account. I can't stress this enough. There are many lenders. In fact, most lenders won't even consider your small business loan application if you don't have a business bank account. That is just the very first thing. Open and use a business bank account. There, whether it's the brick and mortar bank account that you have around the corner, or whether you get a bank account online, it doesn't matter. A lot of lenders just want to make sure that they're giving a small business loan to a business. And one of the ways they do that is with the business bank account. Having spent the last couple of years dealing with the Paycheck Protection Program, this was a big thing because a lot of businesses who would have otherwise qualified for a PPP loan were not able to because they did not have bank account information that validated their assertions about their business, and it really handicapped them. This is an easy, inexpensive step that every business should do, and it's just good practice to make sure that your business bank account and your personal bank account are separate and that you don't commingle funds. So open and use a business bank account. The other one is confirm your time in business. You know that this particular metric is really easy because when you license your business name, when you register your business with the state where you're doing business, the clock starts ticking. And you know, if a bank or another lender is looking for 2 years in business, they want to start counting from that date. And that helps you, even if you've started your business 2 years ago and the first year in business you didn't make any money and now you are, this sets the clock at 2 years ago instead of the year that you've made revenue. So confirm your time in business with your business license, your name registration, or any of those kinds of things. That's really important too. And then check personal credit and business credit. You know, 650 is considered a pretty average credit score. The more below 650 your credit score drifts, the harder it's going to be for you to get financing. Or should I say, the more expensive that financing is going to be if you find it. So right at the very beginning, check your personal credit score. And you know, if there are problems with it, start working on it now to improve it. You know, this is one of those things where slow and steady wins the race. There is no silver bullet to fix your personal credit. It's just a matter of, you know, paying attention to it, watching it, and taking action to repair it. And the same is true with business credit. You should be looking at these two numbers or these two data points on a regular basis. I used to believe that if I looked at my personal credit every quarter, it was enough, or once a year it was enough. But let me tell you that every month is not too frequent. And, you know, it's human nature for us to take positive action regarding those things that we're paying the most attention to. And I know it's just one more thing a business owner has to watch and pay attention to, but this is something you can't ignore. You have to pay attention to this. And even if you don't intend to get a loan right away, right after you start your business, you know, start working on it then to build a good credit profile. And, you know, Jerry has been talking about credit education for years and years and years, and I may have missed something. So is there anything you want to add to that, Jerry?
No, I'll just add that we're going to have a free resource for you in the resources section, so you can check and build your personal and business credit. And I was a victim of both business and personal identity theft this past year. So like Ty said, if I had waited a quarter to check it, I wouldn't have found out until a few months later, and they did a lot of damage in a short period of time. So it's a good idea to check it. All right. So many of our the small business owners that Ty and I talk to think of a bank loan when they think of a small business loan. And if you can get a bank loan for your small business, you should. It's going to be the best money you can get in terms of interest rates, terms. It's just going to be probably a very good loan, whether it's a line of credit, which lets you borrow up to a certain limit, pay it back and borrow again, or whether it's a term loan, a fixed amount of money for a fixed period of time, or even a commercial real estate loan to buy the property that you want to occupy, or a property you want to use for commercial investment purposes. Now, bank loans, many banks and credit unions make their own loans, so they make loans directly to small businesses. In addition, many of them are approved by the SBA to offer SBA loans. So they're called participating lenders. So you may be evaluated for both an SBA loan and a traditional commercial loan by your banker. A lot of times they can do both, so they can figure out where you fit in. I think the challenge with bank loans is that they can be challenging to qualify for. Do you want to touch on these requirements, Ty?
Yes. To preface this, you need to recognize that there is a direct correlation between how easy it is to get the financing and how expensive or inexpensive it is. For example, the bank loans we're talking about right now are great options at probably some of the lowest interest rates, but they're going to be more challenging to qualify for than some of the other options that we're going to talk about that will gradually increase in prices over this. But if you're going into a bank, they want to see something like a solid business plan. They're likely going to require that you have some prior experience. And, it's going to make a difference if you're purchasing a business because they will consider that. If you need help with building a business plan or putting together some of this information, boy, SCORE is just the perfect place to go, because those mentors, they really know their stuff in regards to this, and they can help you put together a solid business plan. They're also going to be looking for good credit. And if you have partners, generally speaking, any partner with over about 20% interest in the business, they're going to check their credit as well as yours. So just be aware that if you have a partner or partners with a weak personal credit, it could impact your ability to get a small business loan. Typically speaking, the minimum requirement at the bank is going to be about a 680 personal credit score. However, if I'm completely candid with you, they want to see credit scores in the 700s. So the better, good to excellent credit is what they're going to be looking for at the bank. And the time to start worrying about your credit profile, like I mentioned before, is before you need a loan. Look, you can check your credit now and start working on it if it's weak. Also, the bank is one of those places that is going to ask for collateral, basically something tangible that, heaven forbid, you should default on the loan. They can sell your collateral to recoup some of their loss. Now, no banker wants to take your collateral. They just want you to make the loan payments. But this way, they feel like you have a little bit of skin in the game and you're going to be more inclined to make each and every periodic payment. They're typically going to ask for a personal guarantee. Just about every single lender I'm aware of, whether it's a bank or an online lender or an equipment lender or whatever, is going to require a personal guarantee. Be prepared. There is just, I'm not personally aware of any financing that isn't going to require that. It's just going to be part of the equation. And your collateral may include your personal assets. You may, years ago, I was speaking with someone who had an SBA loan and they defaulted, and they had used their home as partial collateral, and the SBA was likely going to seize their personal assets. And they were complaining to me about it. And I said, that was your collateral. That's what collateral is for. That's, you're putting your collateral up to secure the loan. So just be aware that the bank is going to require collateral, and it may be your personal property as well.
And I know this all sounds daunting, but we will give you a bunch of different options for financing in a moment. So if you are even thinking about an SBA loan, I'm going to give you 2 quick tips. So some of you are familiar with SBA loans because of the economic injury disaster loan, or EIDL, that has still available, popular because of the pandemic, or because of the Paycheck Protection Program PPP loan, which is now closed. But those are the disaster loans, including EIDL, are the only ones the SBA makes directly. The rest of them go through partners. And so the one thing I want you to understand is that lenders have to meet the SBA's minimum guidelines in order to collect on the guarantee if you don't pay the loan back. But they can add their own requirements as long as they don't discriminate. So, for example, the SBA, for the most part, doesn't have a minimum credit score requirement. They require acceptable credit. And then the lender can determine, how that fits in. So one lender might look for, we have some lenders in our marketplace now that will accept a 680 for an SBA loan, and some that go up to 740 minimum credit score. So it depends on the lender. So my advice there is, if you try to get an SBA loan and you don't qualify with one lender, it doesn't necessarily mean you won't qualify for with another. Now, if you don't qualify as a small business, if you're in an industry that the SBA won't allow loans to be made to, you aren't going to get it anywhere. But always ask the lender if they say you don't qualify, why it is, and whether that's an SBA rule or whether it's their, qualification. And we do have this free guide. It's on the SCORE national website. So if you go to score.org/NAV, there's a bunch of different resources there, but this SBA loan e-guide will give you an overview of the main SBA loan programs, how much they lend, what they lend for, basic requirements, and how to find a lender or qualify.
The line of credit, I love. This is probably my very favorite way for a small business to access capital. Basically, you get a credit limit, and you can borrow as much as you need from the credit limit, repay it, and use it again. And this is just so flexible because you're not waiting for a loan application to be approved or declined. You already have it. It's ready. It's immediate access. And the beauty of it is you can get these at the bank around the corner. There's lots of online places where you can get a line of credit. I just love the line of credit.
Yeah, and I kind of think of them as like a lending insurance policy. If you don't need it, great. But if you do, it's something that can really help you through a lot of different scenarios. Both Ty and I have been business owners. So we've both been through the ups and downs of cash flow. And this is just a reality of being in a small business. Clients who don't pay on time, clients who pay very slowly. I had a client who never paid at all. So a line of credit sometimes can be useful for cash flow purposes. It can also be useful for very quick, turnaround needs, so short-term needs, as well as emergencies. And a short-term need, an example would be the holidays. You need to stock up on inventory, or maybe you're going to do a lot of online advertising in a short period of time. This is where a line of credit could be very useful for that. All right, so now some of you are probably thinking right now, I don't qualify for this. I'm not at that stage yet. I'm worried that this presentation doesn't have any options for me. I want to assure you that we're going to give you some other options here. And that's why we're going to go into forms of flexible financing that has some leeway on some of those factors that we talked about. Ty, you want to explain what the cash advance is?
Yeah, there are a couple different types of cash advance. The one that most people are probably familiar with is the merchant cash advance, or the MCA. And basically what they do is it is an advance against future receivables. In other words, they're going to advance, it's not a loan, they're going to advance you money based upon the amount of credit card transactions that go through your merchant account. The other type of cash advance is a little less familiar, but it's called a business cash advance, or a BCA. And basically what they do is they do the same type of advance, but it's against the cash flow in your business bank account. And so both of these are much easier to qualify for than a small business loan at the bank. But then again, what does that mean? You should expect to pay a little bit higher interest rate. However, there are some advantages. Funds are available very quickly. Oftentimes, you can apply for a loan today, get an answer to your loan inquiry this afternoon, and have money in your bank account the next business day. Now, that there is a premium for that kind of quick turnaround, but this is available. Most of the time, you should expect a daily or a weekly payment. Do you want to back up just a second? And one of the things that you need to recognize is, if you go into the car dealer and you get a car loan, you recognize that your first payment probably won't be due till next month. However, that's not the case with this type of, well, it is the same thing. If you get a daily payment cash advance, your payment will be due on the next business day. So, don't expect a month's grace period. You'll need to start paying right away. If you have $5,000 in credit card accounts, you can probably qualify. The nice thing about it is they're more interested in the volume of business coming through your account rather than your credit score. So there is no lower minimum credit score, and they're really only looking for a couple of months in business. So if you've been in business for 3 to 6 months, then you're going to qualify.
Yeah, and I'm going to touch real quick on the cost of this. And I want to talk about this a little bit generally. Now, you're in New York, and New York, the legislature has passed legislation to require small business financing be disclosed with an annual percentage rate, or APR. That's what we're used to in the consumer world, right? If we shop for a mortgage or a car loan. But generally, but it's not enacted. And I mean, it hasn't been implemented in New York, but you're one of 2 states that is on this track. But right now, across the country, business financing does not require an APR, annual percentage rate. So you might see other terms to describe the cost of finance. You might not see any term. You might just see a fee. It might just state it as a fee, but not translate that to an interest rate. So I just want you to be aware of this, because some of these are going to be fairly expensive. There was a story in Forbes a few years ago about a woman who was working in a hair salon. The owner was selling it. She was going to get financing to buy it from the owner of the hair salon. And she got a term sheet that said 15% stated rate. So she, in her head, she was thinking, oh, 15% APR, 15% interest rate. That sounds great. Her financing terms were put through a calculator like I'm showing you here. And the annual percentage rate was over 4,000% APR. Over 4,000% APR. She thought she was paying 15%. So these calculators are free on the NAV website. They don't require you to put in any personal information. What they'll do is they will translate the cost of your financing to an APR. So at least you can compare and understand what you're getting into. In this example, I'm not going to spend too much time on it in the interest of time, but a factor rate of 1.2 means you're going to pay back 1.2 times the amount that you get advanced. So you get $100, you're going to pay back $120. But just keep this in mind. Just when you see something with small business finance, you're not sure, it doesn't say APR on it, go to that link, nav.com/calculator, use one of the calculators and try to get an idea of what it costs that you don't end up overpaying.
Another type of financing that I really like for small businesses, and particularly for newer businesses, are business credit cards. They're often overlooked. They work much the same way that a line of credit does. You can access the credit available on your card, pay it off, access it again. You know how credit cards work. But the thing I like about them for new businesses is that the decision is made oftentimes primarily based upon the owner's personal credit score and credit history. So if you have a good to great personal credit history, it's going to be really easy for you to get a business credit card. And it's a great way to establish business credit. Because if the business credit card reports to the business credit bureaus, like many of them do, they don't all do that. So you should ask. Then it's a great way to start establishing business credit. And, years ago, I was talking to some executives at one of the major credit bureaus, and it was in 2010, just a couple years after the big financial crash of 2008. And they said that they had been tracking small business startups that actually started their business in the middle of 2008. I'm so used to saying 20 now, 2008. And the successful businesses all shared 2 things in common. One was they leveraged business credit cards, and the other was they leveraged trade accounts with their vendors, which we're going to talk about in just a minute. And those first couple of years of using this type of credit enabled them, as they grew to 2, 3, 4 years, to access other credit, like a term loan at the bank, or a line of credit at the bank, or some of these other types of financing that we've been talking about. So business credit cards are great for that. It's flexible. You use it when you need it. And however, you need to be aware, like that lower right-hand corner of that last card, these credit cards are not covered the same way by the Credit Card Act as your personal card. In other words, you want to make sure you understand the terms. The payment dates are not always the same. Like my credit cards are always due on the 20th of the month. I know that. However, a business credit card could fluctuate. So as soon as that statement comes in, you need to verify that it's, what that payment date is, because let's say you have a business credit card with a 0% APR introductory rate. If you are late on the payment, even if it is at 12:01 a.m. the day after that payment is due, you may lose your 0% introductory APR and pay some pretty hefty fines. Now, fortunately, a lot of business credit card providers, although they're not required to, they still act the same way with their business credit cards as they do with their personal credit cards. That's probably a question that I would ask when I was applying for a business credit card. But this is a great way to establish credit and a great way to leverage borrowed capital. It's relatively easy to qualify for. And if you're a young business, they're not looking for 3 or 4 years in business. They're just looking for your good personal credit history.
Yes, and let me quick point out that we, in the middle, you see this nav.com/reports. That's a list of major credit card issuers, small business cards that do not report to personal credit unless you default. If you don't pay it, it's going to show up on your personal credit, but otherwise it doesn't. And then the second one is a list of the ones that report to business credit, so they can help you build business credit. So that may be something that you want to take in consideration. Now, I also love business credit cards, but I love microloans. And for those of you who responded to that first questionnaire by saying that you maybe don't have revenues or you have a newer business, a microloan might be an option for you. They're typically made by nonprofit lenders, and these lenders are typically tasked with helping to spur economic development, create jobs, maybe serve underserved entrepreneurs. Recently, as a result of legislation, there's been a lot of grants made to SBA resource partners around the country to help and to lenders to help entrepreneurs who traditionally have trouble accessing capital. So there's money out there, but it can be a little bit challenging sometimes to find it. So the one thing that I say in my webinars, whether I'm presenting, someone with SCORE or not, is talk to your SBA resource partner like your SCORE chapter, because they're often attuned to what's going on in your local community. Now, these often are smaller amounts, they're more flexible, and they come with assistance to help your business be successful. Now, one of the ones I'm going to highlight on the right-hand side, so community development financial institutions, CDFIs, these are usually nonprofit lenders. They're all over the country. And again, your SCORE chapter is a great way to identify which ones may be active in your community. The SBA has a microloan program, goes up to $50,000, but the average loan amount is about $14,000. And then Kiva, kiva.org, they go up to $15,000 in the US, and Kiva is 0% interest, 0 fees. They only check your credit to make sure you're not in an active bankruptcy. Otherwise, they don't care what your credit score is. They report to business credit, and it's sort of a combination of microlending and crowdfunding, which we'll talk about in a moment, where you can get money from people who want to support small businesses. So yeah, if you are looking for a smaller loan amount and maybe you are a younger business, check out Kiva, because that may be a great way to start. Ty and I both know a few examples of business owners who started local artisanal food companies, out of their kitchens and grew to, successful businesses using Kiva as their startup funding. Axion is another big micro lender. And so again, just talk to your SBA resource partner so you can find out what's available.
Another type of financing that is overlooked and probably one of the most misunderstood types of financing are vendor terms or trade lines. Basically, if you have a supplier that offers net 30 or 45 or 60-day terms, this is what we're talking about. It's often no interest. You're basically borrowing your suppliers money for 30 days at 0% interest, provided you pay them within the 30 days. What you're going to find is that your vendors are probably going to be the most friendly creditors you have. They are almost as invested in your success as you are, because they want you to keep buying their merchandise. So this is a great way to build business credit and access capital, albeit it's not a loan. It's a short, 30, 45 days, whatever, payment terms. But, if you get in a bind one month, this is a vendor that's maybe likely to float you a few more days because they want you to be successful. There's typically no personal credit check. And like I said before, it'll really help you build business credit. And you can find those if you don't work in a business that generally offers payment terms like this to their customers. You could go to nav.com/vendors, and there's a list of suppliers who offer, regular, the regular types of supplies the average small business owner is going to leverage there, and you can start accounts with them. Now, Jerry has read this book a few years ago. I wanted to talk about it and why it is on this slide.
Oh yeah, so I'll make this brief, but Pancakes in Paris, I love this book. I recommend it. And it's a true story of Craig Carlson, who opened an all-day breakfast, American breakfast diner in Paris, the first one of its kind. I actually got to visit it for the first time not that long ago, so that was pretty exciting. But he went through all kinds of trials and tribulations as a business owner. And the thing that allowed him to actually not fold and to go back to the US without having realized his dream was the fact that he was able to get the coffee and the bacon and the eggs and the wine, because you have wine at an all-day breakfast diner in Paris, and he got those on terms. So his vendors all let him get what he needed. He could cook the breakfast, serve it, and pay them back out of cash flow. So when we talk about this is really important because it can be very important for cash flow. A lot of business owners use it for finance or for building business credit, but it's also great for cash flow, and it's important for some businesses. This is often a stepping stone to better financing, so don't overlook this particular option. Now, one that I love to talk about because it's going to fit those boxes for some of you who have a new business, who don't have great credit, is going to be crowdfunding. There's several different types of crowdfunding. Rewards-based crowdfunding is probably the one you've heard about when you think of something like Kickstarter or Indiegogo. And that's where you have a platform, you have something you want to get funding for, and you offer some kind of reward, whether it's an early, beta version of your product, whether it's for musicians, it might be a t-shirt or a ticket to a concert or even a private show if they, fund enough. But you're basically asking people to put in a little bit of money, and then a lot of people do that and you reach your funding goals. But while a lot of people think about the rewards, and then they also think about donor base, which is the GoFundMes of the world, they often don't know that much about the other platforms that are really, really important: debt-based crowdfunding and equity-based crowdfunding. And these are platforms that let you raise money from investors, and either as equity, which means you're giving shares in your company, or as debt, which means you're going to pay back a loan. And this has been growing like mad over the past few years, even during the pandemic. It's breaking records for the amount of money funded. And there are new businesses that get funded this way. There are established businesses that raise money for a specific project or a new location. I've interviewed a restaurant owner who expanded to another location using crowdfunding. The Securities and Exchange Commission now allows up to $5 million to be raised annually through these platforms. So while we don't have a lot of time to go into it, and it's a kind of its own presentation in itself, I want this to be on your radar, because one of the real benefits of crowdfunding, besides the fact that it's startup friendly and you don't have to have good credit and you don't have to have revenues, etc., is that it builds loyalty. When people support you, they tell other people about it. If they're investors, they want you to be successful. They've invested in your business. Or if it's a debt-based campaign, they want to get paid back. So they want to help you get the word out about your business. So it's a great way to build very loyal fan bases as well. Now it can be involved. So a resource I would recommend that you check out if you are at all interested in this is at crowdfundbetter.com, and they have a free cheat sheet you can download. And then it gives you the names of all the platforms for different types of, all the reputable ones in the different types of crowdfunding. So whether it's rewards-based or equity or debt, or even a fundraising type crowdfunding, that they will give you that in that cheat sheet. So it's a great way to understand what's available.
You know, another place that a lot of business owners go to find capital is retirement funds. You know, you can withdraw funds from your 401k. Be aware that there may be tax implications. There's likely going to be penalties for early withdrawals, but that's something that you can do. You can also borrow against your 401k or 403b. You can't borrow against your IRA, but you can borrow against some of these other types of funds. Or you can roll retirement funds into a C Corp that funds businesses. These funds are available. I admit that one of the businesses I started, I leveraged my 401k funds to start it. And it is capital that you can use, but let me just say, be careful. Make sure that you are being wise with the funds you're using from here if you're going to take them, because basically you're putting your future retirement at risk by leveraging money today that you are going to need further down the road. So this would not be my first choice of funds, but it is available.
Yeah, and we only have about 10 minutes left, so I'm going to go kind of quickly through this last option. Then we're going to give you a few resources because we want to make sure that we have time to answer your questions as well. So equipment loans and leases. A lot of people think about this in terms of hard equipment, maybe heavy equipment or manufacturing equipment, etc. But there's a lot of things that can be leased or equipment you may own that you can get leased back and get some cash flow from. Some types of businesses actually really like this also for asset protection. So medical offices, for example, will often lease everything they can because then if they're sued, they don't own it. It's not something that's at risk. So this can get a little bit involved. There's different types of leases and some have certain tax treatments that are more preferable than others. I believe we will be providing a copy of the slide deck so you can take a look at this a little bit more, but if it's something you're thinking about, talk to your accountant and see what might make sense for you in terms of both your cash flow and any tax benefits that may be available to you if you can lease equipment. And that could be even the laptops that you use in your business. There's a lot of different things that can be leased. All right, so we're going to go into some resources, but let's quick see from the things that we just talked about. I'm wondering if any of these are something that you didn't really know about before that now you're intrigued to learn more about and consider perhaps using in your business. So if there's anything that sticks out in that list, we'll launch this poll. Anything that sticks out in this list that you think you might look into further because it's something that you've learned might be helpful to your business, I'd love to hear from you about these options.
You know, Jerry, while we're waiting for folks to go through and answer this poll, one of the other things I like about equipment financing is it's often available to newer businesses. And, you know, if you have equipment needs in your business, instead of leveraging what limited cash you have on hand to purchase the equipment, a lease or equipment loan allows you to free up cash that you can use in other places. You know, places where you might be borrowing you may want to borrow with a term loan or a line of credit. So, you know, equipment loans are just great that way. It looks like, Jerry, the top loan they're interested in is an SBA loan, followed by a micro loan and crowdfunding, vendor terms, and invoice factoring is down at the bottom. let me just say, don't ignore vendor terms. And it totally makes sense that the SBA loan would be at the top. That's probably the place that you're going to get the friendliest terms and the lowest interest rates. But just be aware, you need to be a pretty qualified borrower.
Yeah, yeah. And well, let's not forget about Kiva though, because Kiva is 0% zero fees. So it doesn't get
Oh,
any
yeah, I love
friendlier-
Kiva.
Doesn't get any friendlier than that. All right. So let me give you a few resources here. The first is Ty and I both work at NAV, and NAV is an online financing marketplace. So we're not a lender. What we do is we match borrowers to different resources. We are so thrilled to be a guest of SCORE today, but we are not affiliated direct. I mean, SCORE is, a nonprofit organization. We're a sponsor, a national sponsor of SCORE, but you don't have to use NAV to work with your SCORE mentor. So we're just here as a guest. And if you decide to check out NAV, just go to nav.com/SCORE and you can sign up for free. And then with your information, we will match you to financing offers. And we do have some pretty good statistics behind our matches to different financing. So the way it works is you pull your business and personal credit, and we use that information to show you offers. We don't sell it. We don't sell the information to lenders. In other words, they're not going to be calling you. Lenders aren't going to be calling you because you filled out a NAV profile. And then you'll also be able to see your business and personal credit in the NAV dashboard, updated monthly, soft pull, so it doesn't affect your credit score in any way. And then you can build and monitor your business credit as well. So it's kind of an integrated solution, both for building and monitoring your business credit, as well as finding financing offers when you need them. And we do have a ton of free resources at NAV, our e-guides. They are on the SCORE website. So you can go to the national SCORE website, score.org/NAV, to download any of these, including Where's the Money, which summarizes what we talked about today, a credit guide, smart credit strategies, the SBA loan guide that I mentioned. There's webinars on there. Our most popular webinar we've done is the How to Find a Small Business Grant, and that is on this page. So if you're looking for small business grants, that'd be a good place to go. And then Ty, you should quick talk about our grant too.
Yes, every quarter we offer two grants, a $10,000 grant and a $5,000 grant. And it's probably one of the things I love the most about NAV. We talk to literally hundreds of small business owners every year that go through the application process. And we've offered grants to everybody from equestrians to food trucks to candle makers to merchants to bars and restaurants. It's a wonderful thing. And you go to nav.com/grant to apply. We will be announcing our latest grant winners, I think, next week. And then the process will start all over again for Q1 of 2022.
Okay, so I'm going to stop sharing for a moment so that I can switch over to the other version of the presentation, which has our SCORE. Let me see if I can find that. Let me see if I can do it again. All right, I have the wrong one. Let me get over there. We have the SCORE slide and the other version, so I'll get to that. And then in the meantime, do we have any questions that we want to start asking? Let me see if I can get over there.
Yeah, we have a couple of questions, Jerry.
Okay, great. Okay, I'll get this slide up for us. There we go. Okay.
Okay, I can share some of the questions with you that we have.
Sure.
The first one was, does the EIDL 2021 loans require collateral?
No, they do not require collateral, but there is a UCC1 filing, which is it's placed against the business, and it covers property of the business if you have a loan of more than $25,000. So that will show up on your business credit, and it could be a factor in other financing. So you just need to be aware of that it will be there, and it's basically giving the SBA the ability to go after collateral of the business if there is a default. Remember, with all SBA loans, taxpayers ultimately back them up, right? So if the borrower doesn't pay, it's going to be, taxpayers who lose. So they're trying to protect the interest of those who are lending the money, which is all of us.
Another question that comes up is with regard to crowdfunding with investor-backed funds. Is there someone you'd recommend speaking to prior to entering contracts for equity?
Yes, so crowdfundbetter.com, that website that I shared, I'm not affiliated with them directly. I just like what they do. They have actually a great, very inexpensive course on crowdfunding that's going to help you understand which type is best and what to do. And then they do provide consulting. So they may be able to help you with, deciding how to structure that crowdfunding offer so that you can get it right. Otherwise, the other thing that you can do is when you get their cheat sheet, they have a list of the top platforms for equity crowdfunding. And each of those have some great educational videos and resources, and spend a little time going through those. Some of them, WeFunder, Seed Invest, they do a great job with educating people who want to use their platforms.
Jerry, one point, we won't have time probably to get through all the questions. When we send out a copy of this presentation to everybody, your contact information will be there if somebody wants to email you or contact you with a question. So I just say that in advance. So if we have to shut down with some questions unanswered, there is a resource. You can also call the SCORE offices if it's more of a planning type question, not specific to the presentation. But I have two questions that are pretty similar. Talking about business, is there a business debit card that also operates as a credit card? And does that work in the same way as establishing business credit? You know, you did talk about business credit cards, and this would be a business debit / credit card, I suspect. And the second,
the issue with debit cards is that you're not borrowing money. So it typically is not reported, although there are a couple of cash cards. I think Divvy, Ty, I don't know, do you remember? I think Divvy reports to business credit, and you can operate that. Yeah, and you can operate that where you pay it basically the same day. So yes, that's a great question. If you email us after you get the presentation notes, I'll look and try to double check who does that, but I believe Divvy does that.
Great. And also a related type question, as an employee, can I get a business bank account? Which is interesting.
If you don't own a business, it's problematic, isn't it?
Yeah.
You have to own a business to get a business bank account. Employees won't be able to do that.
Okay. Let me just, a couple of thank you notes. This might be better approached in person with you or a SCORE office, but the question is basically, do you have any insights as to which banks in the Hudson Valley are more small business friendly for starting a business account? Some of them require high balances in order to avoid monthly fees.
I think your SCORE mentor is going to be able to give you better advice about banks in the Hudson Valley than we would be able to do.
Yeah, you're not really local to the
Yeah,
area.
we're not there in New York. So I think whatever SCORE mentor you're working with will be able to help you with that.
Yeah, but I would add there's a lot of online banks too that now are catering to small businesses with no minimum deposit requirements. So if you can't find what you're looking for locally, you can use an online business bank as well.
And in a lot of cases, the answer is to try several.
Mm-hmm.
And they also change their requirements and their terms not infrequently during the course of a year. At least some do. So it's worth doing some homework on it. Another question, which I think is easily answerable through the SBA website, but how does the EIDL application work? And by the way, the EIDL application window closes on December 31st this year, if I'm not mistaken. Does the SBA use certified lenders to issue EIDL? How do I apply for EIDL, and how to follow up with you for a quick phone chat?
Yeah, your SCORE mentor is
from the EIDL, sorry.
Yeah, on EIDL, check with your SCORE mentor because it goes directly through the SBA. It's a disaster loan. So all disaster loans go directly through the SBA. You apply at sba.gov, but they can answer questions you have about the application process. It's really not that bad, but it seems intimidating when you start because it's kind of unfamiliar. So your SCORE has great resources on EIDL.
And the EIDL application is online on the SBA website. And that's basically how you do apply for the application. The last question that I have here is there a credit card for building business credit that you would recommend?
You know,
Yes.
just about any business credit card is going to help you build business credit if you, if they report to the business credit bureaus. And you can go to the NAV marketplace and we've got a good representation of what's available there. And, you know, start the process and get matched to a business credit card where you have a greater opportunity to actually qualify and find success.
Good. Let me toss out one more piece of information, which Jerry just sent over to me, and I apologize for not having had it earlier. But to contact Jerry at NavCom, it is Jerry, Gerri, at nav.com, Jerry at nav.com. It's also Ty's contact is T Kissel, Kissel, that's all lowercase together, at nav.com. So
I
again,
don't, wait, Ty, isn't it KIIS?
KII, two I's and one S.
I'm sorry. So I do apologize. Let me try that again. TKIISEL at nav.com. All right, sorry about that. So they will be very responsive to your questions. And I think that kind of wraps up the questions on a perfectly timely basis because the big hand is just about at the 12. And I would like to thank you guys so very much for the participation and for the information you've given. And thank you all who have attended this webinar. Hopefully it was useful and good luck in your business ventures.
Yes, thanks, everyone.
Thanks for inviting us.